So it's like the easiest loan ever. And even if situations has changed for your job or things like that, it just has no impact. You're able to drop the interest rate from where you're currently at to a new mortgage, very, very, very low cost in comparison to maybe
no appraisal. There's no appraisal required. There's no income required. There's no credit required, although you do have to show a payment history on that mortgage.
Correct.
You have to show that you made your payments on time or since you've had the mortgage or for the last 12 months.
Absolutely. So you've got that. And I mean, there's some slight nuances with it as well, is that you are bringing some funds because your loan balance barely goes up because the only thing that's basically allowed to be financed back in is the mortgage insurance and payable to directly to HUD. But you have, some of those closing costs that you're going to have to cover. But if you look at the math and like they can hop on the phone with you or me and we could break down the scenario for them specifically. But a lot of times based off their cash flow over the course of a couple months, it's a complete wash and all they're doing is dropping their mortgage payment down and based off of payments that they're not having to make, escrow refunds, all of that sort of stuff. It becomes a huge win for so many people to do a loan that is not only is it easy, probably the easiest loan you've ever had to do, but paired with that, it's also a super, super low cost loan and a great way to drop the mortgage payment.
I have a lot of people that are streamlining right now, and a lot of people get these mailers on Streamline, and a lot of people don't understand, or a lot of people don't realize that almost every loan has the ability to streamline aside from conventional. So you have VA allows you to streamline refinance. They call it an ERL, interest rate reduction refinance loan. And then they have FHA streamline. They have USDA streamline refinances. And so if you have one of these loans, you should definitely reach out to Justice or myself, and we can definitely walk you through how this actually breaks down.
Absolutely. Yeah. Love to break that down, go over the math, and just actually help you consider whether or not it makes sense.
Yeah. I'm also curious on what your thoughts are with interest rates. And I heard you say that you believe interest rates are going to continue to come down. We've seen a little bit of a spike up a little bit here, but I have clients right now that, are like, hey, Pete, I kind of want to wait to see and wait for interest rates to come down a little bit more before I pull the trigger on this, right now monthly savings.
Yeah, I'd say the timing of it matters, but I think the education and the thought process, I've been having a lot of similar conversations with a lot of my clients. And I think it's holistically understanding their situation, but then also looking at the market and looking at the math. I talked with a client this morning and we were talking about what's the cost of waiting if we don't refinance, because you have to think about if we're not refinancing today, we're also missing out on the savings that we're able to capitalize
Over
on
the
today.
Next 2, 3, 4 months. Yeah.
And so if interest rates trend down over the next several months or into the next couple of years, if you're paying 6, 7, 8% and you can get, a much lower interest rate, what's actually the savings that you're missing out on, and forecasting that into the future? Because maybe you can save an extra $100 a month, but that is 12 months down the road before you're going to save that extra $100, $200 a month. So my question would be, how low do you think interest rates are going to go, and how long do you think it'll take to get there? Which I have clients that are like, well, I don't know. That's what you're supposed to tell me. But at the same time, it's like, that brings it up. It's like, well, none of us really exactly know, which is why doing the math based on your scenario today and structuring a loan that makes sense so that we're not handicapping you in the future. We have such a short recoupment period, so we're doing a loan that makes sense in an environment where interest rates are going down.
Yeah, so what I heard you say there was it depends on the situation with that customer, and they should really take a look at not just what they're going to save by waiting potentially, but also what they would lose on paying that higher interest or higher cost over that period of time of waiting for that specific interest rate to get there.
Spot on.
Yeah, I definitely agree with you for that. I think that also depends on the customer's situation too. So like if someone's planning on maybe moving in 1 year, maybe it's not the best time, or maybe they should not refinance, or, depending on their situation, if they are okay with, waiting a few months, and it just depends on what's happening, with that particular customer.
100%. I think you got to take every scenario, every family uniquely to their situation, because as you put it, like if someone's going to be purchasing a home in a year or in 6 months, and right now they're currently occupying their home, terms are going to be so much better if you're financing the house as a primary residence when you're living in the house. And so
Totally.
if you're refinancing now while you still own the property, like don't pay higher interest and then, move and then go, oh, I'm going to go try to refinance that primary residence loan, because now it's a rental loan. Now it's an investment property loan. And so terms, you're going to be offsetting that, based off of where the market's at. So it may be, again, there's no one size fits all in this industry or for every family. Everybody runs their finances different. Everybody has a different scenario, different plan. Hey, I'm going to switch jobs, and go self-employed, next month. Maybe we should be looking at how we can get you qualified for a loan before you change, everything around.
So what I heard you say, there's two things there. The first one was if they know they're going to go self-employed, if they're going to be making a big job change, for sure, take a look at that refinance, because you can get that payment lowered. You may have maybe a longer waiting period to recoup, but it might make sense because you are taking that big leap into self-employment, because you're at least 2 years out before you can get another mortgage.
Absolutely.
The other situation I heard you say was if you plan on turning this house into a rental property and you want to buy another primary in the next couple of years, well, now would be the great time to do the refinance, because you can take advantage of the lower interest rate right now. Don't wait until you want to purchase, or maybe you purchase and then refinance later, because on an investment refinance, if it's an investment property, that interest rate is going to be at least 1% and a lot more expensive, higher than what they could as a primary.
Absolutely. That's just where knowing your situation, and when you work with someone who's like, hey, what are we actually considering here?
Yeah.
I think the biggest challenge, and I'm like, don't want to beat up too much on online lenders, so to speak, but like majority of those people are about the deal. It's about, how can I get a deal in? How can I meet my quota? How can I go out and get another paycheck or get an additional commission, versus working with someone who's actually going to try to make a decision for you based off your family and your scenario. And that's the biggest difference, right? You have someone who's going to look at what you're aiming to accomplish, look at the market, piece all that together and go, here's what actually makes sense for you. And here's why we would do it, or here's why we would wait. Here's why, it makes sense. And here's why it doesn't. And being able to actually be honest. I mean, that's what everybody wants. They want somebody who's going to leverage their expertise in their industry to actually make a beneficial impact in their family.
What are your thoughts on appreciation over the next year, 2 years, 3 years? What are your thoughts on if someone's on the fence, if they're a first-time buyer? Do you think that they should get in as soon as possible? What are your thoughts on just the overall general real estate market?
Man, there's a few different thought processes.